We had a pretty goofy end of the week with the Jackson Hole Symposium wrapping up and with Fed Chair Powell and the other FOMC members coming out and finally sharing their thoughts on the future monetary policy here in the US. And as a result of that, we kind of got a mixed bag and some weird candles on the chart. But overall, we have technicals and fundamentals lining up, which is always a good thing. By the way, welcome back to the Trading Edge video. If this is your first time joining, my name is Akil Stokes. I am a professional trader. I'm also a trading coach over at tier1trading.com. And this is a video I put out each and every week, sharing my thoughts on the market, showing you some of the top ideas that are on my radar for the week ahead, and hopefully giving you a little bit of education that will help push you further in a positive direction, of course, in your trading journey. We're going to get started today with the euro dollar. And the first thing I want to bring your attention to is this zone right here. You see, this was our previous level of structure that price action was really holding and consolidating at for a very long time. And we finally broke and closed below it. We had a few rejections right here, but you can see as we ended the week, we broke and closed below this low, which allows us to have a directional bias. Now, I just answered a question for a trader the other day where this guy is brand new and he was asking, Akil, what are the first things I should learn as a newer trader? And I told him two things. I said, one, you need to research the basics of how the market works and really make a decision on what type of trading philosophy you want to have. Do you want to be more fundamentally based where you're paying attention to news and making your decisions off of data and stuff like that? Or do you want to be more technical based where you're using the price chart, like what's in front of you, and using what you see on the price chart to look for opportunities? Because that's going to really set you forward on either going to the right or going to the left. And yes, both can be combined and used together. We call that hybrid trading. But as the centerpiece of your philosophy, one has to be more important than the other. The second thing, and let's assume you choose technical analysis, the second thing that I would say is you need to have a mastery of the basics, right? Meaning you need to understand the basics of how to read a price chart, how to determine trend, how to read a candlestick, whether it's strength or weakness, momentum or loss of momentum. You need to know what counts as structure and what counts as a violation of structure, and how that really allows you to make the next prediction, because consistency is key in trading. If you don't have consistency in how you view a price chart, it's going to be very hard to be consistent in your analysis and in the trades that you take and ultimately your execution. By the way, I've been doing a lot of these little short videos, these questions that I get from traders on a daily basis, and turning them into content on my social media. So if you haven't done so already, make sure you check out, Reels on Instagram, Shorts on YouTube, TikToks on TikTok, whatever it is, but there's a handful of awesome content there if you guys want to check it out at Akil Stokes RTM. But here on the euro dollar, you can see that we recently broke and closed below structure. And the fact that we broke and closed below this important level of structure allows me to make a prediction on which direction price is likely to go. And that answer is going to be lower. Now, the next part of the prediction that I want to make is, Akil, if we're going to go lower, this is kind of the inner dialogue that I have where I talk to myself, right? Not crazy, just a trader. And most traders are lonely, don't have any friends. So we talk to ourselves a lot, right? You've been there, right? Not just me. Someone in the comment section, don't leave me hanging. But the question is now, okay, Akil, if we're going to go lower, where are we likely to go lower to? And in a broad sense, we can analyze and say, hey, this is our next level of consolidation. We are likely to go down to here. However, this doesn't really help us too much. One, price action has already spiked into this level. Two, this zone goes from 107.82 all the way down to about 106.37. So it's about 140 pip zone, which is it's good to start. It's painting the perimeter, but we need more details if we're actually going to find a trading opportunity in here. And in the past, this was something, right? I am structure based, so I'm really good at identifying levels of structure and key levels that I think price action will go to. It's just something that a skill that I've acquired and a skill that I've kind of sharpened over years and years and years. If you're a newer trader, I don't expect you to kind of pick out levels like this yellow line right away, but understand as you work and develop that skill, you can get to that point. But I want more. I want confirmation, right? I want, and I look at analyzing the charts and looking for trading decisions as being like a detective or a lawyer, where the more clues, the more evidence I have that price is interested in a certain level, the better that trading opportunity becomes. And last year, or actually 2 years, it's been about 2 years researching volume in the market, right? Volume in the Forex market specifically was something that I really poo-pooed for a long time, and there's reasons for that. I actually have a podcast coming out later today, which explains kind of how I made that shift. So if you want the long story about how I went from hating volume to loving and using volume, you can kind of check out that podcast tonight. But essentially, after a full year of research and a full year of repetitions in the live markets, right? Live trading room members, you guys are with me for a full year where we're implementing this in our analysis before actually using it. And yes, that's the type of patience it takes, at least for me, to make sure I'm doing something correctly before I implement it. Volume has become an important part of my trading, and it allows me to get more precise and better, I guess you can even say, with entries and exits. And what I see here is I see really a lapse of volume until after this current level, until we get down to about this even handled number, this 107 even handle, which allows me to reduce my profit really from 107.45s, 107.50s down to about 107 evens, giving me about 50 pips more of potential profit. And that's the difference between a non-trading opportunity or a potential non-trading opportunity and a decent trading opportunity. So what I want to look for here on the euro dollar is, again, we're looking for shorts. I can't trade it quite yet, and here's the goofiness from Friday. But what I need is a fresh break. So I need, first and foremost, for the market to take out these lows. Once we get this fresh break, this would confirm my suspicions that we're likely to continue lower. Then I can look for essentially the same thing that we did here, right? A pullback and an extension lower, right? So here's our pullback. Here's our extension lower, the basis of how price action moves. Fresh break, lower low, lower close, allows us to make a new prediction lower. Look for that pullback just because that's my personal trading style, and an extension lower to that 107 even handle. So euro dollar is on the radar for that. We have another example over on pound dollar. This is actually a little bit better here on the pound dollar. We'll start off on the daily chart and kind of do the same thing, give you guys some repetitions. Now I say this one is better because there's a little bit more room for opportunity, right? So price action just did this on the pound dollar, right? We came down to, once again, our inside zone of previous structure, almost identical to the euro dollar, just a little bit more spread out. And you can see we ended the week with a break and close below. If price action breaks and closes below structure, then I predict a continuation lower. If price action is likely to continue lower, then, Akil, where are we likely to continue lower to, right? And just from a pure structure perspective, my eyes pick out two levels. One, right here, these two candles right there, and then two, right down there. And obviously one level, I'll change this color to the pink so you can see them differently. One level is going to offer more opportunity than the other. So how do I decide which level to go for? Well, before we'd bring in tools, and I still do this, Fibonacci's, even handle numbers, all the technical tricks that we use to analyze the market. But something that has helped massively with that is, again, bringing in volume and seeing what levels are more important, and specifically kind of the fixed range volume, so horizontal volume versus vertical volume at the bottom of your chart. And I can see that at my first line right here, my first area of suspicion, right? There's not really a lot of interest, right? And I use volume as a synonym for interest. I hope that's the right word. Public school, Philadelphia education, didn't really do good in English, but I think cinnamon. Now I'm hungry. Synonym, right? I'm about to make cinnamon waffles and pancakes for the kiddos out there. That's why it's on my mind. But synonym, there we go, is something that is similar. At least that's the trick I remember, right? So I always like to think of volume as being a synonym for structure or interest, where the higher the volume is, the more interest there is at that level. The lower the volume is, the less interest there is at that level. Structure is basically the same thing. Key levels of structure are key levels of interest. Levels that aren't really kind of key levels of structure, not too much interest there, or you see the market just blow right through them. So fact of the matter is, you can see on our volume to the right, we don't really have a lot of interest in this level. In this first level, interest does start to spike up at that second level right here. Again, we have another even handled number as well, 124 even. So I can disregard this first level, or at least kind of not make this the main level to shoot for targets at, and shoot for that second level on the way down. 4-hour chart, same thing as the Eurodollar before. Don't need to kind of repeat this too much, but we need a fresh break first and foremost, just because of how this candlestick has formed. I would need a fresh break and then looking for that continuation down to the pink line. So those are two cool opportunities of structure and price action based trading. Got a few pattern formations for you as well. Let's start with the Euro Yen. Let's go down here on the hourly chart. You look at this on the 4-hour too. This is going to be a deep potential Gartley pattern, right? This first move right here, this high momentum candle is going to be our X to A, our swing high to swing low. Check your data. I just missed the 786 by like a pip. I don't have any rules that say close enough. It's black or white. Either it hits it or it doesn't hit it. So make sure you check your own data, because data is going to be a little bit different depending on your data provider and whatnot. We then get a 618 retracement with the second leg right here. Down here is going to be our C. And what that's going to do is that's going to set us up for a very deep Gartley pattern. I'm not going to draw this all the way out, but we're going to have a decompletion at the very high. So we started to get there already. We're not quite there. I will draw it out for you. That way you can actually see where it's at. Sorry, I do this a lot in my head and forget that you guys actually want to see this stuff. But our 127 right up here, 158.37 is going to be the completion point of this Gartley. And the cool thing is, again, with these, we call them deep Gartley patterns because they complete high up in the zone. The stop loss isn't any different. So the fact that we're completing higher in the zone, all it does is reduce our stop loss, giving us a better risk reward ratio on this potential opportunity. So potential bearish, right? This would be a sell for you guys that are new. This is a advanced pattern formation, which is, we can eliminate all this stuff. It's a series of ebbs and flows in the market that hit very specific Fibonacci retracements and extensions in a very specific order. And when it does so, it's like this magic meal that's created that throws profit your way, right? The win percentages aren't super great. Typically you're looking at with pattern formations, ciphers at the high end are going to be like 70. Gartleys and bats are going to be more like 60 to 55s to 50 in that range. So it's not like a super high win percentage, but they've been reliable patterns for me for my entire trading career. I kind of call them the slow and steady Freddies. They're old, they're boring, they're just there, but they produce profit, especially in times of consolidation. So it's been kind of a very consistent part of my trading plan, which I value consistency if you haven't gotten that point already. We have one more pattern formation setting up. We're going to be on the pound New Zealand. This is going to be another one. This is going to be an example of a bat pattern. So this pattern's a little bit different. Same type of ebb and flow that's happening here, right? Initial X to A leg, swing high to swing low. The difference is, right, we have this A to B leg, same type of retracement. The difference is the Fibonacci level that it hits. Remember, we have to hit a specific Fibonacci level in a specific order. In the first one, we hit a 618, but didn't hit a 786, which kind of, if you can imagine a checklist, right? Hitting the 618 checks off, meaning it can't be a bat. If we were to hit the 786, it means it can't be a Gartley. So that first one was a Gartley because it did not hit the 786 and it surpassed the 50%. This one would be the opposite, right? In order to have a Gartley, we need that 618 Fibonacci retracement to be hit. We did not hit that. We retraced that to 50%, which puts us on alert for a bat pattern, which gives us just a different decompletion. So for this decompletion, we're looking at a move up to the 886. This is going to be our decompletion and decompletion zone from the 886 all the way to the top of the X leg. And we're looking for another bearish potential pattern here in the form of a bearish bat here on the pound New Zealand. Now for a DKC update. So just as a little recap, the DKC was a trading strategy that I started trading live in April. It was every year I do some type of strategy development where I work out these new ideas, and like 99% of the time they fail, but every once in a while it actually works. The DKC was a strategy that worked, although not the way I initially planned. Initially, it was an idea that was supposed to be used on the daily chart. It didn't work the way I wanted it to on a daily chart, and I was just having some fun on a lower time frame, and it started working real well. So I started kind of following up on it, and it started working even better. And then it ended up being something that worked really, really good on a 15-minute chart. And I started trading it live in April because I like trading stuff live before I ever teach it to anyone else. It's just a belief of mine. I don't like teaching stuff I don't actually do. And we've been tracking it because I like going through the whole kind of like journal of the whole journey of like you seeing me start with the initial ideas, you see me kind of fail and flustered, and you see the bright side of it. Because I think it's important for every trader to see the journey that actually happens in strategy development. It's not just like, hey, I create a strategy and it works right away. There's a lot of pain, a lot of suffering, stuff like that. So, those type of videos are on the platform with Tier 1 Trading, where those traders kind of have the inside look at what I've gone through. But here on YouTube, I've been trying to keep you guys updated every once in a while on how the performance is going as well. And I think I last updated you about a month ago. Maybe I think it was after the first week of August, and not too much has changed. There's been like 26 more trades since then, since I think first week of August was the last one I did. Win percentage is exactly the same as it was. The average win dropped by 0.1, 0.01, something like that. And we were able to really bang out about 3% more in profit, which is good. Again, I'm not sure if you guys have seen it in my videos on like expectations, but I'm not one of those traders that expects like 20% a month. I've done a few podcast episodes on that, kind of defending my case, but I think if you ask most professional traders and you get a realistic view of what's, I don't want to say possible, but what's realistic, I think you'll find the same. So to be up 26% from April, that's what? April, May, June, July, August, 5 months. That's, more than 5% a month. That's at the upper end of what I would expect from myself as a trader. So I'm quite happy with that. I do expect a drawdown period to come. Mainly because this specific strategy and its testing showed that it does take some massive losing streaks, and we're coming off a pretty good heater the last 2 months, so I expect a little bit of a retracement on that. It wouldn't surprise me if it was September. September is historically a directional month, and this is more of a reversal type of strategy, meaning it's not like a trend continuation one. So if I had to guess, September is going to be pretty rough. But that's the cool part of the journey, tracking it and seeing how it goes and gathering as much information as possible and mentally preparing for it. That way you don't do anything crazy when it does happen. So I'll keep you guys updated every once in a while whenever I remember. This is my busy period again, so the memory is gone. But hope you guys enjoyed. As always, hit that like button before you leave. Subscribe if you're new. I know a lot of you guys watch this video, but you're not subscribed. And leave any comments if you have any questions, right? Whether it's questions specific to this video or just general trading questions. Again, I'm doing those trading shorts, those quick kind of Q&A type of deals on social media. So I'm looking through the comments. I'm trying to gather information from what you guys want to hear about. And that way I can address it and shoot it to all the traders, because you're not the only one that has that question. All right, aside from that, if you're interested in learning how to trade, www.tier1trading.com. Great coaches, great services, great community, great lessons. Give it a try, right? We have a risk-free $1 trial membership. We charge $1 to keep the trolls away, but join us for 14 days for just $1. There's no sneaky auto bill or anything like that. You just get kicked out once your 14 days is up. www.tier1trading.com. I'll see you guys over there, and I'll see you guys next week, maybe, but possibly maybe not, for another episode of The Weekend Trading Edge.